Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Friday. Welcome everybody to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing day. Yesterday was a Thanksgiving holiday here in the U.S., so the U.S. markets were closed, but it doesn't mean we didn't have some currency markets that were making some moves. So far in the futures markets, we're down about 9.5 points this morning in the S&P. Looks like our little rally on Wednesday didn't hold, as we kind of didn't expect it to. But now we are setting up for what could be a little bit of a breakdown in the S&P. Remember, today's only a half day of trading. So with only a half day of trading, we may see light volume. We may see weak breakdowns. So even though we may see a breakout, it's not something that I may be willing to take. So what I'm going to do is primarily go over some of these levels, but really kind of keep it fairly short today because I'll be, quite transparent. I think it makes a lot more sense to not try to trade directional breakouts on days where we have very, very light volume. So let's go ahead and dive right in real quick. So the S&P, we are getting in a normal market day, right? If today were, I don't know, Tuesday, March 13th or whatever, I'd be licking my chops over this price pattern. This is the price pattern that I want to see. I've got lower swing highs in price. I've got basically the same lows. And this could be a potential for a breakdown, okay? Now, unfortunately, with the light volume I'm expecting today, I don't think that it's a great idea to try to short that thing. There's a good chance that we'll stay just right around this 2650 to 2630 range. Now, it's still a 20-point range. And if you are a little bit more aggressive, I'm sure there's intraday small time frame opportunities. But even on the 15-minute chart, theoretically on a 15-minute chart, you could have an opportunity above this area here if we stay fairly tight in a fairly tight band. You could look up to this area here. For a potential reversal trade if price does indeed make it into there. So I think if you do anything today, although I like the breakdown, you might actually be better off looking at this here as a potential for a reversal trade. Now, remind you, I'm on a 15-minute time period, so my probabilities will always be a bit lower when I'm on a smaller time period. But in case we do get some rally, I treat Fridays as we've been getting our Friday afternoon swoon. Today it would be a Friday late morning swoon if indeed we happen to rally up early in the day. This could be a reversal point. Looking at the NASDAQ, we still have some levels up above us. That same level that I identified in the S&P is right about here in the NASDAQ. I don't want to put necessarily the same level on both markets. So the NASDAQ overall I'm going to leave be. Crude oil, for those of you that joined in our crude oil breakdown, our breakdown trade for crude oil did indeed hit and meet entry, and then we've came down and identified and touched the second target. So crude oil hit that second target on our last live trading room. We talked about that there's no real reason to be a buyer of crude. And that's what we've seen, is that crude came down, hit that second target, and now let's see if we get a little bit of a bounce to get us a chance to get back in. Now we've finally actually found weekly demand in crude. This is the first time we've hit fresh weekly demand in crude oil. This has been a very, very tough week for crude. It's continuing its downward move. We're down to $52 a barrel, all the way from 75 just a few weeks ago. This is I don't know statistically if this is the worst quarter ever for crude, but it's looking really terrible for crude oil investors. We had a period here back in, what was that, 2014, where we had this 2013, the end of 2013, where we had many weeks in a row, and that's kind of what we're looking like here. That's when we went from 90 to 49 in a span of just a few weeks. Well, we've gone from 75 down to 50, and so it's a little bit longer time period here in the past, but it's just as parabolic of a move down. So let's see if we do stop or stall even a little bit at this weekly area of demand. For the meantime, any rally right now is just an opportunity to get short. We need to consider any rally as an opportunity to get short in both crude oil and in the markets in general. Gold, we are kind of hovering. Had a little bit of a sell-off in the gold markets in the overnight sessions. We're gaining a little bit of basing, and maybe we'll catch a bit of a rally at some point today. There could be a little bit of a reversal right in here at the origin of this little sell-off. If we get a little bit of a move back into there. Looking at our bonds and currency markets. So in the bonds, I had a little bit of a breakdown set up on the ZN off of this rising wedge pattern. We did get a little bit of a breakdown out of that level. We've come back up in the live trading room. We talked about closing it out at essentially a break-even amount if you did take the short, because it looked like it was about over. It came to its opposing fair price value area and started to pop up. So it worked out for a little tiny move, but now it's just kind of just hopping along sideways, and so there's no real reason to keep that area in play. Next, their area to look at would be the Aussie. So in the Aussie, we're getting very, very similar price pattern actually to what we have in the S&P, which is lower swing highs, roughly the same swing lows. The Aussie, in my mind, does give us a decent opportunity somewhere up in this range here, right around the open of the Aussie markets this morning. So if we get a rally back up into here at some point late morning, this could be a good little shorting opportunity. In the euro, we did hit our euro reversal level. It may or may not have given you the trigger, depending on how deep you set your trigger inside the level. And then we've got a strong sell-off out of this zone. So the euro level worked out beautifully as far as price action goes. And then we had right here at the market open, we had a little bit of a stalling point. So I'm actually going to add another little level right here in case we make it back up to that area. This could serve as a decent reversal. Now what I'm looking at here is that this occurred right at the European market open. Time of day is very important for some of these reversals, and so this would be one to take a gander. The Canadian dollar. So this is the origin of a very strong move down in the Canadian dollar. Price has hit that level, begun to move down. So if you jumped in on that one, take your stop, lock in some profits, move it down to 758.23. That would be the next area for price to move down in the Canadian dollar. Looking at the Great British Pound, we are still in between our levels in the Great British Pound, as it's not quite gotten there yet. And then the Japanese yen, we converted our limit entry to a confirmation style entry, and then price is not, we popped up off of there. I don't like this level as much anymore. It's just simply because we traded above it for so long. I'll still leave the confirmation entry in, but if we base above it again, I'll definitely wind up canceling this as an opportunity. So if you got any questions, please feel free to send us an email, support@tradersarmy.com. We have our live trading room on Sunday evening. If you want to join us, please do so. Black Friday specials have come out, so go to tradersarmy.com to learn more about our Black Friday specials today, and I will leave the link to that in the comment section below. So hope everybody has a great day. I will see you soon.